so would want to dive straight into the numbers to further understand how these equities fared up. But looking at the end of yesterday's trading session, we're looking at a total of 1,500,400 shares, corresponding to a market value of 57,955,250 Ugandan shillings. Now, comparing this data with our previous trading session, we're looking at an 83% decline in volume and an 83% decline in turnover, and all this is leaving us at a market capitalization of 22.7 trillion Ugandan shillings. Now, this is still quite an impressive market capitalization for the Uganda Securities Exchange, and hopefully by the end of today's trading session, the market will close at a higher market capitalization to impress our investors. But in aggregate, we're looking at 4 listed equities participating in the trading, and we ended with 2 gainers as well as 5 losers. The 2 gainers were Equity Bank, that went up by 0.93%, and KCB Group, that also went up by 0 point of day price depreciation of 2.17% to close at about 4,082.58 Ugandan shillings per share, followed by Centum Investments, that also went down by 1.58%, Nation Media Group, that went down by 1%, and Jubilee Holdings, that also went down by 0.45%. Stanbic Bank recorded the highest trading volume, which was 1.4 million traded shares, followed by Airtel Uganda, that recorded 42,500, and Bank of Baroda Uganda with 8,400. DFC also showed a movement of about 500, and looking at other companies, we're seeing British American Tobacco Uganda, that still didn't show any movement as of yesterday, and their share price stands at 15,000 Ugandan shillings. Bank of Baroda is at 20 Ugandan shillings. Centum Investments went down by 4.01, closing at 249.69 Ugandan shillings per share. DFCU also didn't show any movement, but recorded a trading volume of 500, closing at 225 Ugandan shillings per share. East African Breweries is at 4,082.58. Equity Bank is at 1,261.37, and that was an appreciation of about 11.59. Jubilee Holdings went down by 22.1, and they closed at 4,879 Ugandan shillings per share. Kenya Airways also went down by 0.5, closing at 109.92. KCB Group is also at 972.93, which is an appreciation of about 8.57. MTN Uganda is at 170, and National Insurance Corporation is at 5 Ugandan shillings per share. We're seeing Nation Media Group with 519.47. Now, this is recording a 5.24 depreciation in their share price. New Vision is at 153 Ugandan shillings per share. Quality Chemicals is at 55, and Stanbic Bank is at 37.75. We're looking at Uganda Clays, also showing 12 Ugandan shillings per share, and Umeme, that is at 460 Ugandan shillings per share. Uchumi is quite a dormant equity on the Uganda Securities Exchange, but currently its share price still stands at 8.21 Ugandan shillings per share. Stanbic recorded a trading volume of 1,449,000, and that was its performance as of yesterday. Now, regarding the performance of the market indices, we're looking at the benchmark, which is the all share index, that increased by 13.42, which is about 1.29%, points to close at 1,055.37, representing a 1-week gain of 3.5%, a 4-week loss of 0.61%, but an overall year-to-date gain of 20 20.96%. The Uganda Securities Exchange Local Company Index, on the other hand, also increased by 1.74% to reach about 264.51 points. Now, this is obviously making it a one-week gain of 2.08%, a four-week gain of 0.35%, as well as a year-to-date loss of 2.7%. Now, that is how trading went on the Uganda Securities Exchange as of yesterday, and we are hoping to see more of these companies coming up in our performance sheets as today's trading session ends. But we'd also want to look into the Nairobi Securities Exchange and make a comparison for these cross-listed equities and see how they are faring up on the other end. Now, in terms of our previous trading session, we ended with about a total of 16,773,500 shares in about 934 deals. Now, this was corresponding to a market value of 316,577,412 Kenyan shillings. And comparing this with our previous trading session, the data is actually showing a 59% improvement in volume, and we're looking at a 35% improvement in turnover, but a 10% decline in deals. Now, this is leaving a market capitalization of about 1.72 trillion Kenyan shillings. And in aggregate, we're looking at 48 listed equities that participated in the trading, ending with 18 gainers as well as 19 losers. Bamburi Cement led the gainers with 28.33%, and that is a share price appreciation, closing at about 57.75 Kenyan shillings per share. It was followed by Liberty Kenya Holdings that also went up by 7.69%. We're seeing Samir Africa that also went up by 7.25%, as well as TPS Eastern African Serena that went up by 5.26%. Now, that is a list of the 18 some of the 18 gainers that came up on the Nairobi Securities Exchange in terms of yesterday's performance. Now, we'll be right back after a short break with the performance on the losing end, as well as the performance of their market indices and more influential news in the financial space within East Africa. Welcome back from that very short break. I'm looking on to the losers end in terms of the market performance. We're looking at the losers, and TransCentury came out last with an end of day price depreciation of 10%, closing at 0.36 Kenyan shillings per share. It was followed by Uchumi that also went down by 10%. BK Group also went down by 9.12%, and Everyday East Africa went down by 7.14%. Safaricom recorded the highest trading volume of 6.59 million traded shares, followed by Cooperative Bank of Kenya with 5.3 million. Centum Investments also recorded 943,400, as well as TransCentury with 749,500. Now, Now, looking into other cross-listed equities on the Nairobi Securities Exchange, we're looking at Absa Bank that is at 13.95, which is showing a decrease of about 0.1, and that is their current price as of today. British American Tobacco, Kenya, is at 354 Kenyan shillings and showed a price appreciation of 2.50. We're looking at and showed a price appreciation of 0.5. And looking at Britam Holdings, Britam is at 5.90 Kenyan shillings per share, recording an appreciation of 0.2, and they showed some trading volume of about 2,500. Diamond Trust Bank Kenya is at 46.4, and that is in Kenyan shillings with no recent movement. East African Breweries is at 142.50 Kenyan shillings per share. This is a decrease of about 0.25 from their previous trading price. Equity Group Holdings is at 43.70 Kenyan shillings per share, and we're looking at an appreciation of 0.3 and some trading volume about 4,100. I&M Holdings is at 21.70 Kenyan shillings per share. Jubilee Holdings is at 172.25 Kenyan shillings per share with no recent trading volume. KCB Group is at 34.10 Kenyan shillings per share, and we're looking at a decrease of about 0.8, and we saw some recent trading volume of about 15,900 coming in from KCB Group. Kenya Airways is at 3.85 Kenyan shillings per share. NCBA is at 41.20 Kenyan shillings per share. We're looking at Stanbic Holdings that didn't record any trading volume, but their share price stands at 114 Kenyan shillings per share. Safaricom is at 17.10, and that was an appreciation of about 0.05 from their recent trading volume. Uchumi Supermarket is at 0.19 Kenyan shillings per share, recording an appreciation of 0.01 and trading volume of 26,500. And shifting our focus onto the performance of their various market indices, we're looking at the benchmark that shed about 0.37, and we're looking at a 0.34% depreciation, points to close at 109.68 on the all share index. Now, this was representing a 1-week gain of 0.92%, a 4-week close of 3.19%, but an overall year-to-date gain of 19.08%. Other remarkable indices that performed were the share index that also went down by 0.83% and leaving a 1-week gain of 2.26%, as well as a year-to-date gain of 24.71%. The 20 share index also went up by 0.42%, and we're looking at a 0.95% 1-week gain, as well as a 12.06% year-to-date gain. And now the 25 share index went down by 0.39%, leaving a 1-week gain of 2.01%, as well as a year-to-date gain of 21.7%. Now, that is quite impressive on the indices on the Nairobi Securities Exchange, and hopefully by the end of today's trading session we shall be seeing more positive results coming in from that very corner. Now, shifting our focus onto other really influential headlines that have affected the performance of these market indices, we're looking at Bank of Uganda starting the buying of locally produced gold to support forex reserves. Now, Uganda's central bank has actually begun buying locally produced gold to bolster its depleting foreign reserves and tackle emerging challenges in international financial markets. So the move could lower the country's growing gold exports, and whose shipments brought in about $2.3 billion last year from $200 million in the previous year. So Bank of Uganda, in consultation with the relevant key stakeholders, has initiated a domestic gold purchase program, and the bank said in its June State of the Economy report seen by Reuters yesterday. So the gold purchase program will help in accumulating foreign currency reserves and address the associated risks in the international financial markets. But Bank of Uganda did not specify the risks in international financial markets it was referring to, and for that we shall wait probably for a better and a more insightful public address on that particular statement. But the bank said in its June report that Uganda's foreign exchange reserves stood at about $3.5 billion as at April 30th, and equivalent to about 3.2 months of import cover, down from 3.4 months of a year earlier. So in April, the central bank said the country's foreign exchange reserves had fallen due to rising external debt repayments and the central bank's inability to buy foreign currency due to a slide in the local currency. So Uganda's gold production capacity has surged in recent years as various investors, including Belgian refiner Alain Götz, set up processing facilities in the country, although critics have said some of the gold may also be flowing in from Eastern Democratic Republic of Congo. Now, hopefully, we shall have more information on that gold situation within Uganda. But as that is happening, we're looking at Ethiopia earning records of about $1.4 billion from coffee exports alone, and it is actually quite impressive to see that Ethiopia's coffee exports have drastically shot to the skies in the previous quarter alone. We're also looking at headlines coming in from Tanzania with Bamburi tea stakeholders and their view on the recent listing of the company's stock, and we have many more headlines coming in also from South Sudan, and their president firing the sixth Minister of Finance since 2020. We are yet to see more insights on that briefly, and also looking into global markets, we are looking at the performance of gold, and particularly the performance of other metals. But we're also looking at the commodities market and how the UK is responding to the current situation. So we're also looking at the Japanese yen, the recent performance of the Japanese yen, and the current financial situation in Asia, particularly China, and how the world, especially the USA, is reacting to these moves. But other than that, we're focusing on the East African markets, and also we have more information coming in from the particular exports Uganda is relying on, particularly from Rwanda, and how this is affecting their economy, and also ever since their joining of the East African community. But we have more insights as well on the laundering or the illegal importation of gold from the Eastern Democratic Republic of Congo, and we are also noticing that many capable investors are using the opportunity of this country's political instability to exploit its resources in a way that is not acceptable. But as Uganda is also receiving that gold. It is caught up within hard times because many of the gold that was expected to have come from these Ugandan mines is actually coming in from the eastern part of the Democratic Republic of Congo. Now, we're also yet to see how authorities are reacting towards that particular situation, and hopefully if the situation is dealt with absolute equality, we are yet to get we're yet to get real results from that investigation. We're also looking at big banks rallying, and it is about to be put to test. The confidence in big banks outperforming stocks will also be tested in as the second quarter earnings are released today. So we're yet to see how the Fed is responding to this effect, and the recent realization of how big banks like JP Morgan have been outperforming stocks of recent. And we're looking at the stocks of big banks that are outperforming the rest of the S&P 500 this year, and we're looking at investor confidence about to be put to the test. Now, JP Morgan, Chase, and we're looking at Wells Fargo as well as Citigroup all report their second quarter results today, and kicking off another earnings season for the US banking industry. Now, Bank of America reports the following on Tuesday, and hopefully by today we shall have a brighter view from that end. But the stocks of these banks, the four largest in the US, have each climbed more than 20% since the beginning of the year, and they're actually outperforming the S&P 500. So that performance is also roughly double the gains of an index that tracks the wider industry, and the KBW Nasdaq Bank Index as well. So big bank investors are optimistic about the ability of the biggest financial institutions to thrive as the Federal Reserve slowly lowers interest rates and regulators water down a set of new bank capital rules, and Wall Street deal-making stages make a comeback. So the Fed's policy, the Fed's policy path, which currently is expected to be 1 or 2 cuts in 2024, followed by more 2025, really bodes well for the group of the big banks over the next year, and that was according to the RBC Capital Markets Bank analyst Gerald Cassidy. So the actual results from the big banks during the second quarter are actually not expected to stand, and despite a headline number from JP Morgan that will likely blow away all rivals. And JP Morgan is expected to report a sizable net profit due partly to a pre-tax multi-billion-dollar accounting boost from an exchange of shares in credit from credit card giant Visa, but analysts say that won't grab a lot of attention for the market watchers. And let's not forget that market watchers all is on the lookout for the price that is heading up so they could buy, which causes the price to fall, and vice versa. So I think the market will event, and we're looking at Scott Cyphers, an analyst from one of the largest banks, likely be more focused that interest income and that profit, which measures the difference between what banks pay out in deposits and take in from their loans, is actually expected to be down from the sequential quarter, and the same goes for other 3 big banks. So even the biggest banks have been struggling with this measure as deposits costs stay elevated and loan demand remains weak, and the Fed takes longer than expected to bring interest rates back down. So investors are hoping to see that net interest income for the second quarter will ideally be the trough for big banks this year. So the results from the big banks are also likely to reveal the cautionary stance these leaders are taking, as we're looking at the credit high rates posing more challenges for their borrowers. But New provisions set aside to cover future loan losses at the big four banks are expected to rise by about 26% from last quarter, and by comparison, the pace of loan loss provision across all commercial banks began to stabilize earlier this year, and that was rising to about 0.30% over the quarter, and that was according to the Federal Reserve data. So where results should be considerably brighter are within the Wall Street operations of these big banks, as deal-making stages come back from poor performances in 2023 and 2022. So the big four banks, along with Wall Street specialists Goldman Sachs and Morgan Stanley, are all expected to show sizable jumps, and we're looking at an average of more than 30% and in investment banking fees compared with a year ago. So Goldman and Morgan Stanley report their earnings on Monday and Tuesday, and the big event that all banks are waiting for is when the Fed finally decides to start lowering rates from a 23-year high, and the current market bet is that it could happen as early as September of this very year. So for smaller regional banks, the sooner the rates cut come in, the better, and they are more reliant on lending income, and thus have been hit harder by a drop in net interest income across the industry. So they're also exposed to weaknesses in the commercial real estate market, and investors have pushed down the stocks of various regional and small banks this year as new problems or concerns surface within that very space. So it happened last week after Dallas Bank First Foundation announced a $223 million infusion from new investors to help it reduce its concentration of multifamily apartment loans. And it also happened in June following an analyst's report calling out debt held by Bank OZK, and in May when a short seller targeted Exos Financial over the quality of its property loans. So commercial real estate worries first ignited at the start of this year when the New York Community Bank Corp set aside a surprising amount of money in case of loan losses in part of rent-regulated apartment complexes in the New York City area. And we're looking at NYCB's stock plummeting, but it was able to actually calm the market with an emergency equity infusion from a group of included former Treasury Secretary Stephen Mnuchin. So all this is all of this turmoil has subdued investor expectations for regional banks, and Bank of America analyst Abraham Ponawala said that in his recent communication. And investors will actually be able to watch for more vulnerabilities as many mid-sized institutions report in the coming weeks. So for these leaders, we're looking at the bull case, and that is their actual credit losses being significantly lower than what is being priced into their stocks. So a regional banker and also an analyst mentioned that it is what is actually going to be priced on these banks' stocks. So we're looking at institutions relying heavily on commercial real estate lending, and this isn't likely to be a benefit of doubt until the credit cycle has come to its full circle. So an index tracking regional bank stock and KRE is actually flat has been flat since the beginning of the year, and David Hollerden is a senior reporter, and he mentioned this in his last communication. So we are waiting to see how the Fed's decision as of today is going going to affect the prices of the dollar on the general market, and we know that the movement of these prices directly affects the performance of these other East African currencies as well. We're looking at the S&P futures standing at 5,639.75 US dollars, and the Dow futures is at 40,121. Nasdaq futures is at 20,404.25. We're looking at Russell 2000 futures with 2,162.1. Crude oil stands at 83.44, and that was recording a 0.99% appreciation. Gold is at 2,409.9 with a depreciation of 0.5%. Silver is at 31.01 with a depreciation of 2.07%, and we're looking at different pairs like the euro against the US dollar, and we're looking at 1.0876, and with the looks of it, the price is still heading upwards. The 10-year bond stands at 4.1930 with a depreciation of 2.03%, and we're looking at Bitcoin standing at 57,030.76 with a depreciation of 2.05%. We're also looking at the CMC Crypto 200 standing at 1,190.91. The FTSE 100 is at 8,251.54 with an appreciation of about 0.34. We're also seeing 46% of Warren Buffett's $410 billion portfolio being invested in for artificial intelligence. And if a big dog like him is seeing the future in artificial intelligence stocks, it is worth looking into. But when it comes to Wall Street investing, the great Berkshire Hathaway Warren Buffett is on a pedestal for his own, and since taking the reins at Berkshire in 1965, he's overseen a cumulative return in his company's Class A shares, and we're looking at about 5,028,429% as of the closing bell on July 10th. On an annualized basis, we're looking at an oracle of Omaha that has practically doubled up the total return, including dividends paid, off the benchmark S&P 500 since the mid-60s. Now, his formula for success primarily involves buying stakes in brand name, time-tested businesses with well-defined competitive advantages, while this strategy actually places a lot of emphasis on value stocks. We're also looking at occasional growth stocks, and these wind up in about 44 stock with about 410 billion US dollar portfolio, and his team actually oversees all of this at the Berkshire Hathaway. But what might be especially surprising is discovering that Warren Buffett and his cohorts have at least inadvertently bet big on the artificial intelligence revolution. And AI involves the use of software and systems for tasks that humans would typically oversee or undertake, and the capacity for these systems to learn and evolve over time, becoming more proficient at their tasks or perhaps learning new skills, is actually what gives AI such a broad-reaching utility. So as of the closing bell of July 10th, a whooping 46%, which is about 188.8 billion US dollars of the $410 billion portfolio Warren Buffett oversees at Berkshire Hathaway was invested in 4 top-notch AI stocks, and we're looking at Apple that boasts a $183.9 billion portfolio, which is about 44.8% of invested assets. And all the way back in June during the company's annual Worldwide Developer Conference. Apple unveiled what it dubbed Apple Intelligence, and through Apple, and actually though Apple has been leaning on various AI solutions for years, we're looking at it laying out plans to bring out chatbot solutions powered by ChatGPT to its operating systems, and we're looking at all of this pairing up with their voice assistant Siri to be a lot more intuitive. And we're seeing a lot more coming in from the AI space, and Warren Buffett's indicator sounds alarm, as well as stock market levels now surpassing the dot-com bubble with a great financial crisis. Now that has been today's general analysis on the financial markets. We have seen how business went down in our previous trading sessions according to the Uganda Securities Exchange as well as the Nairobi Securities Exchange, and we're yet to see a lot more going on with today's communications from the Fed and how it's going to affect prices of the dollar as well as the prices of currencies within East Africa. We're also waiting to see how this move from Bank of Uganda is going to make a positive impact on the country's foreign reserves. So we're yet to start next week with a lot of interesting news to set our eyes on, and we shall be here to give you every bit of analysis on how those markets fare up. But I've been your host, Victor Chiberu, and we shall meet in our next session of Markets Watch on financial markets.
Smart 24, driving business.
Amanya gange nze Nabaloga Barbara naviridde mu Kiteezi nga mbadde nkola ebyemikono mu weaving ow'emikono nga naye nkozesa ngalo na mpiso neza bulijjo. Wano mazeewo weeks 2 mu training eno, nyongedde okukuguka mu kukola table mats nga nkozesa ebintu ebyaffe ebyawano ebya bulijjo ng'ebyayi, ewuzi, nga nkozesa kamashini. Naye obuzibu bwensanze mu kuyiga kwange kuno nti kineetagisa okuba nga nina mashini okusobola okwongera okukola ebintu byange nga bwe mbiyize nga nfunye kamashini. So neebaza aba GROW abatuteekekedde omusomo guno ne PSFU okututeekamu ssente ne batulowoozaako ne batuteekamu omusomo guno. Mbeebaliza ddala era obubaka bwempa basaba banteekemu obwesige ne ssente sobole okwongera omutindo gwange nga bwe nviize wano.
GROW, generating growth opportunities and productivity for women enterprises.
Blue magic is my joy. Ono blue magic wange. Ayo talaba kumabala atukuza nonyirirawo kirako enyange tayisa bubi fabriki kyonna kyekiri kigwa lwa blue magic is my choice. Ono blue magic ye wange. And the blue magic is my choice. Hey, ono blue magic ye wange.
inspired souls, brought together by love, are set on a life-changing journey.
This is your life, Mackenzie. This is no longer a dream.
It's just something about Mackenzie.
I'll never marry you.
Your position does not allow you to break work relationship rules.
Where choices change everything. Crossroads, a brand new telenovela starting 25th June at 8 p.m. on Pearl Magic Prime. DSTV channel 148, GoTV channel 303.
Luxury redefined at Seasan Hotel as you indulge in the splendor of elegant living fit for the royalty that you are. Step into comfort, pampering and